Hey guys, welcome back to the channel. Friends, in this video we'll be following up on our previous video and we'll try to evaluate whether this is the perfect time to invest in Nifty 50 or equities, or should we wait, right? So I'm gonna give you a very simple fundamental analysis for any common sense investor to take the right positions in the market as of now and how to think about them, right? So the websites I'll be using here in this video are TradingView, and by the way, these are all free. Anybody can use it if you're following on this video, and Trendline, right? So if you'll go to Trendline and just search for Nifty 50 over here, you'll have all this data of Nifty 50. So what data Trendline gives you is the P by E ratio of Nifty 50, the earnings per share of Nifty 50, right? And you can see today the EPS of Nifty 50 is 1100, right? And P by E is 21.5. But this is kind of moderately high. It's not very high PE. We would say a high PE Nifty 50 when it is above 24, right? And when it is below 18, it is cheap, right? Inexpensive. It is low PE. In the range 18 to 24, it is moderately high. It is medium level PE, right? So when is the right time to invest? When the Nifty 50's P by E goes below 18, right? And let's try to calculate in this video what that Nifty level would be, right? So you can also see from this graph which I had shown in my previous video also, but just for people who have missed, I will show here. There's a trend which has now broken the uptrend of Nifty, which was this uptrend which you'll get after joining higher highs, right? I'll go to the weekly chart here. That uptrend is now broken and Nifty is now in the downtrend. So this downtrend you'll get when you'll join the higher tops, and you'll see the tops basically, and you see that now we're forming lower tops. So and this is gonna follow for some time. So there's a very likely chance that the market will further go down, and it should follow this channel, right? So until this it breaches above this top line, right, it is likely to be in the downtrend, and we are already at 23,603 level today, as of today 27th, sorry, today's date is 7th of February. We are likely to go down, right? So let's try to find out what is the right level for you to now take entry. So the GDP of Indian economy is growing at 8%, right? And if you just see this earnings per share of Nifty, this basically indirectly represents the growth of GDP, and our GDP grows at around 7 to 8%, right? So if you just consider and project for 1 year growth in earnings of Nifty 50, it is right now at 1100. 8% plus 1100, it should be close to 1200 levels, right? So EPS after 1 year would be 1200. That is the most confident projection what we can make for earnings of Nifty 50. And what would be the level at after 1 year for us to make a good move into Nifty 50? So 21.5 is high, right? If let's say after 1 year it is 18, right, which is cheap, and the earnings are also growing at 8%, then considering 1200 EPS at 18 PE, what should be the price of Nifty 50? So just calculate with the calculator here. 1200 into 18, this is 21,600. So this 21,600 level, if we get today, right, we will be in a very good position to invest in this index. And why am I saying that? So we are buying it cheap on the earnings, and we are buying it cheap on the P by E ratio. So if we get definitely after 1 year the earnings would be 1200, right? So we are buying it cheap today. If it touches 21,600, so very good move, right? Likewise, when it touches 18, both the conditions will be met, and 21,600 level of Nifty 50 is the time which makes a lot of sense to make a big lump sum investment. That's where I will make my investment, I can just say that. So this is how you think about as a analytical guy, right? When you're investing, so you cannot say when the market is going to fall, when the market is going to rise, but you can always evaluate if the market is expensive or the market is not expensive. So right now market is moderately expensive, but if it really touches 21,600 levels, it would be it would be inexpensive, and this is the time one should go in to invest in the index itself. Don't go for individual shares, wait for the index and take your positions, right? Now, people who are already invested, they don't have to do anything. Don't withdraw money, because then you have to pay a lot of capital gains and transaction taxes, which will just cut down your returns. So keep the money inside NIF. Don't pull out the money which is already there. Just if you have some cash position, some debt money, some money in debt, use that to take a position when a 21,600 level is hit. Like, I mean, this is not an investment advice. Obviously, I cannot give an investment advice on this channel, but this is what an intelligent person should do, and I will surely do it for my investing. Yeah, so I hope you like the video and you got the point. When we really want to invest when the PE ratio as well as EPS, we are getting at a discounted price. So if we pay the price of 1200 earnings today and at 18% PY, it's a very good deal for us. So I hope you found this video useful, guys. Do let me know in the comment section below what you think about this. And yeah, I'll see you again in the next video. Till then, take care, bye bye, and I'll see you soon. Thanks for watching.